Hi everyone, welcome back to satokoworld Financial Academy. On our last lesson, we have learned about protection funds, and there are two types of protection funds, right? The first one is super emergency fund, and then second one is emergency fund. So the super emergency fund was the physical cash that you would have it with you, so you'll be able to live comfortably for 2 to 3 days if there is no access to the cash. And emergency fund, I know many people heard of this emergency fund, and we're going to learn about this emergency fund today. So what is the emergency fund anyway? So it is a cash money you would keep for emergency purpose. So buying a Gucci purse and stuff, that is not emergencies, okay? And here is a kind of sad fact. 1 in 3 baby boomers have less than $1,000 saved. So less than $1,000 saved. In baby boomers are mid-50s to mid-70s. So those people couldn't even come up with $1,000 if there was an emergency. That is very scary and sad, right? And so for what kind of emergency this emergency fund for? So everybody knows this during the COVID, many people got laid off, and I got laid off too for a year and 2 months. And it's actually very interesting, but just before COVID, because I work in the airline industry, right? Just before COVID, airline stock was going up, and the airlines, was busier than ever and stuff. And I felt my job was secure, and I had so much cash money, and I even thought about investing it just before COVID. And COVID hit, and then I thank God I had that money, because that money allowed me to do what I wanted to do during the layoff, which was to study finance. I went back to school during the COVID, so I was able to pay for the tuition. I had time. I didn't have to look for a job. And yeah, that's why I'm able to stand here and introduce you guys to my ideas of the finance. So, but many people, they had to get the minimum wage job, or they even had to sell the stock on the bottom. And that really broke my heart when I heard it. And other emergencies, that's a breakdown on the car. So this is a breakdown on the car, okay? So if that was a maintenance or buying tires, that is not emergency. So you have to plan accordingly for that. And if you have the emergency fund and car broke down, you may be able to get a new car with that emergency fund, or good down payment on the car as well, right? And then breakdown on appliances, especially for those homeowners. And washer and dryer, fridge, oven, they're not cheap, right? So you have to be ready for it. For any day it may break down, right? And illnesses, it could be you might get sick, or it could be your family member. And where I live in Canada, medical care is covered by government, or I should say our tax dollars. But many countries, that is not the case. They have to come up with expensive medical care for surgeries and all those things, right? And your family member could be living outside of Canada, and they may need that money for the medical care, the surgeries and all that things. And you want to be able to support them if that kind of things happen, right? So those are the examples of the emergencies. So now, how much do we need for emergency fund? This is actually a very good question. Again, I am here to guide you so you can find the right amount for you. I'm not here to tell you, I can only suggest. And so this is my suggestion, okay? That is the minimum amount you'll be able to live for 8 to 12 months without any income coming in. And can you imagine how much that could be? Unless you calculate it, you wouldn't know. So we're going to calculate. So what would be the minimum amount that you need to cover if you had to, if you got laid off or something, no income coming in. So the first, you must cover rent or mortgage, right? And people who have mortgage, that includes the your what do you call those, tax thing, property tax, and also for the condo, the maintenance fees as well. And the second, utilities, and that includes electricity and gas, and also your cell phone, internet. Those are necessities now, you know it. And the cable, for me, it's not necessity, but some people, it could be the necessity. So that's utilities. And then 3, transportation costs. Do you have a car? Do you use transit? And people who use transit, of course, you gotta buy the pass. And people who have car, of course, you have to pay for gas and maintenance, and you may have car loan, right? And 3, food. So it's a basic food cost. If you get laid off, no income coming in, you're not gonna go to steak dinner, right? That doesn't count. So that's the minimum food cost I'm talking about. And number 4, insurance. If you have a car, you have to pay for the insurance to drive, right? And for your house, you have to get insurance. For, let's say in US or other countries, you may have to pay for your medical insurance. So those you have to calculate per month, and then you're going to have a total of it. So, and then the total amount of the emergency fund per month times months needed. So how many months of the emergency fund that you decide to keep it with you? And let's say this is an example. If the total per month of 1 to 4 was $2,500, and for 3 months, you would have to have $7,500. And for 6 months, you would have $15,000. And then 9 months, let's say, it would be $22,500. And for 12 months, for whole year worth, that would be $30,000. And I know I just heard you say, what? That's gonna take forever. Some people, I know it's a big amount of money, but I want you to start getting used to this big amount of money as well. And now, as I said on my last lesson, cash is king or cash is trash. And then I said both. I don't want you to miss out on the investment opportunities either. So here's my recommendation. So I want you to aim for 3 months first. If that was $2,500 a month, I want you to aim for $7,500. And that's the minimum amount that I want you to have before starting to invest, okay? And the amount of the money you would have, so the first 15,000, or first, I should say 6 months worth, I want you to just put it in the bank and high interest rate, which is not high at all, but it is accessible. You can withdraw it anytime, right? And the next, let's say 15,000, or from 9 to 12 months, from 6 to 12 months worth, that would be, I want you to invest in a safe, liquid place. Liquid meaning almost cash that you can actually withdraw it anytime, any day. So and there is some investment, of course, a little bit more, higher interest or higher profit than this high interest in the bank. So I will introduce that as well in an investment videos, all right? And here's a little bit of side things, but people who have investment property, I would suggest you to have emergency fund plus 1 to 3% of property value. So if you have $1 million home, I want you to have extra $10,000 to $30,000 for the emergency. Can you imagine if you had emergency at your home and you got laid off and something happens at your place, and then investment property, it needed like a bunch of stuff, roof and stuff? That would be a nightmare. So make sure to have extra cash. And so 1 to 3% of property value, that's for the house. And if you have condo, you're gonna minus the maintenance fee, because many of the things are looked after by maintenance fees, right? I had an investment property before until last year, and yeah, I had to come up with like $20,000 plus, and then I didn't have it. And that's going to be a long story, but I almost had to go through foreclosure because I didn't have that money. And in the end, I came up with it. But yeah, and towards the end, my appliances, everything starting to die. And I had to come up with, brand new appliances, right? Now, last year I was, of course, I planned it and I had extra money, so I was able to look after everything and now successfully be able to sell that place with good profit. So that's for the people who have investment property. And now, this is the important part. People who have debts, which was like me like 8 years ago, which interest rate is above 6%, and there is reason to, I'm going to explain. And so people who have debts which interest rate is above 6%, your emergency fund is going to be $1,000 only. $1,000. Yes, the reason why I said above 6% is because for the stock market, the average return that we are going to aim would be between 6 to 8% in a long term, okay? So I don't want you to miss investing if your interest rate is under 6%. But if you have a promotional like credit card, 0% interest rate and stuff, and that was like 1 year, I want you to pay it off within 1 year, because after 1 year, it's going back to like 19.99 or something, right? So I don't want you to keep that debt, but something that's like mortgage, that should be under 6%. I don't want you to pay it off, not yet, okay? So that's emergency fund, $1,000. And now today's assignment, we're going to calculate how much emergency fund per month we need and decide how much you save per paycheck. So are you going to start saving $200 a month towards emergency funds, or $500 a month towards emergency funds? People who are struggling, it can be as little as like $50, $100, but you have to make a decision to how much. All right, so today's lesson was emergency fund. Thank you for watching, guys. If you still haven't, please subscribe. And if you like, please press the like button. Thank you, everybody. And if you want to expedite your progress and work with me, please email me at satokoworld@outlook.com. And I'll see you guys in 10 days. And start wealthy, and we're gonna be wealthier. Bye, guys.